ready to go here. So, okay, perfect. So we'll go ahead and get started here. Alrighty, good morning everybody. It is Thursday, November 4th, 2021, and we're going to go ahead and get started with our pre-market analysis on the S&P 500 futures market. Has been a pretty interesting month here. Well, at least October has been. Coming into November has been just a relentless push here. I think someone's mic is live, so I'm going to go ahead and mute that real quick here. Okay, we got that taken care of. So it's been just kind of an insane bull rally here for over a month, right? So going all the way back to October 1st, where are we here? Scrolling all the way back, all the way down to the lows that we made on October 1st and October 12th. We got this really, really strong bullish push, and here we are. Yesterday, remember when we came into the market, we said there wasn't enough of a bearish clue off of the highs to have any type of bearish sentiment going into the market yesterday. So when we were sideways, we did expect a break to the upside. However, we were sideways all morning, so we didn't actually get the breakout until, what was it, about 11 a.m. Pacific time there, and then finally got this push to what we expected, new all-time highs, and then through the overnight session, we've slowly continued to chug higher here. So what we're going to do is jump up to our ultra high time frames and dial down from there and see what the picture is saying this morning, so we can get an idea of where we would expect the market to be heading. So going up to our quarterly chart, if you've been here for the last two Thursday sessions, nothing really has changed. Everything looks extremely strong on the quarterly chart. As you can see, RVI up at the very top end of the range, indicating a very strong bullish market, and we don't have any signs of exhaustion from an RVI perspective. On the monthly, we've talked about this, and I'm not going to spend time today. So if you if you don't understand what I'm talking about, you can go back to some of our other pre-market sessions, which are all available on YouTube at my channel. Again, if you have any questions, send me a message, put it in the text box. We can get you set up with all that stuff. But looking on the monthly here, we talked about this last week. We've got this really strong bullish engulfing monthly bar that closed from, remember, that rally from the low of October 1st all the way to the highs when we closed. So we've got this really nice bullish engulfing bar, and looks like a continuation to the upside, which is what you would expect when you get that kind of bar. And we went ahead and highlighted in previous sessions all these previous bullish engulfing bars, and you can see kind of the continuation out of there. So looking very strong. Now, what I'm not going to talk about here is the fact that we did push to a lower high on RVI, but we got a higher high on price. There is the potential for bearish divergence off highs until this RVI can get up above the high that we made back on this August 2021 candle. But again, there are the caveats to all that, and I go into detail on why we might not want to hang our hats on a bearish signal right now, and would want to be hanging our hats more on bullish indications off lows. So for now, monthly looks very strong outside of this, and it will take time to develop. If this ends up being a bearish divergence, it's going to take another month or maybe even 2 months to actually have some type of confirmation. So not really worth spending too much time on. Pretty much the same thing on the weekly. Everything looks very, very strong, just like the monthly. However, we have the same situation where the RVI is technically lower than the previous major high we made in the market, even though price is higher. So we do have that potential bearish case, but remember, this candle has to close. We need another candle to open, and then we actually need to see a peak on the RVI here. So that next weekly candle then has to close lower than where we got up here, so that we actually have two peaks to compare. So again, it takes a long time to actually get confirmation on these higher time frames, which is why I'm trying to quickly move through them. I think the main thing that we need to take away from these high time frames is this strong push, the strong bullish case that we had from the October 1st low, and this continuation higher with, in my opinion, looking very strong. As far as candlesticks go, everything looks, there's no signs of exhaustion there. One other thing just that's interesting to point out is we were looking at this fib retracement over here and talked about how we pulled back into the 61.8 retracement, and then we started bouncing out again back on October 1st. We'll look at where the 27% extension of this leg is. This is why I love using Fibonacci, not only for support off of retracement levels, but for targets to the upside. Notice where that first target would have been at 46.83, and our high is just about 20 points below that. Remember, we're looking at a weekly chart here, so even though it might look very close, that's still at 20 points away, but still very, very close. On our daily here, jumping down, remember we talked about the potential bearish divergence. Again, potential, we needed the next candle to open and close and get some type of peak on RVI so we could actually compare. However, as you can see, price has just continued to chug to higher highs, and now the RVI is continuing to chug to higher highs. No bearish divergence. Daily looks extremely strong, again, with no signs of exhaustion in this push. So things are just looking very strong on all of our high time frames. And then if you look at the ranges down on the RVI here, if you look to all these high time frames, from the quarterly perspective, we've never broken below 70, which is insanely bullish. On the monthly, we've really rarely ever broken below 60, also very, very bullish. And then our weekly, very rarely ever broke below 60 over the last, let's call year and a half as well. So looking strong. And our daily, as you can see, came down on this correction and tested right around the 40, which is the bottom end of the bullish range, and then pushed right back up to the 80s here. So looking very strong from that perspective as well. So pretty much everything is pointing to higher right now. Let's go down to our 4-hour and we'll start looking into the detail here as to what's going on. So yesterday, remember, we expected the bullish push to at least test the previous high from the day before, if not push to new all-time highs. We did get it, and we got that push just as the 4-hour printed a bullish signal on the 4-hour chart. So once that 4-hour chart printed a bullish signal, we then got this push out to close the day out at new all-time highs. So we have that nice bullish signal from the lows. However, we do have a little bit of a exhaustion pattern off that high. The key thing to take away from this 4-hour chart is every time we get a 4-hour bearish signal off a high, we get some type of pullback and then a continuation to the upside. So although we do have that bearish signal, this might be all we get as far as a pullback. It might only pull back from 46.60, 46.59, whatever that high is, 60.50. It might only pull back 10 points here to 50 and continue to go. But keep in mind, we have great levels below us to kind of hang our hat on if it does pull back lower. But so far, we got this little micro 10-point pullback, and now the bulls are continuing to kind of hold the market up at the top end here. So we'll have to see who wins out this morning. Keep in mind the overnight high, which happens to be 46.6250. Once that breaks, essentially all these bearish highs that we got off the overnight highs will be negated. And then again, we expect a continued push higher. So right now, the 4-hour line in the sand is going to be the high, the overnight high at 62.50. A bearish argument from there. Once that breaks, we can have even more faith in the continued bullish push here. So we're going to have to watch 62.50 this morning. Let's go down to our 60-minute. And again, you're still getting the same situation. The overnight high has a bearish case. You can see we got a wick up and a fairly bearish looking candle there. And again, even though you start to get some bearish signals in this kind of market, the bulls seem to just jump right back in. And right now, as I'm speaking, it looks like the bulls are, there's no pullback from the overnight high. There was maybe a little less than 10 points, and the bulls are back to rally, attempting to rally here. So 60-minute agreeing with the 4-hour, which is great. And if we just zoom out and we look at the last major pullback, so we had this kind of this rally back from October. There was a pullback here from October 22nd, this launch out, and we drew a fib on this specific leg back when we were looking at the charts here. We pulled back and bounced right off the 61.8. So again, this is why I love looking at fibs, especially when they line up with previous resistance in the market. Got the bounce up, and then look at where our 100% extension of that leg was that we were watching back maybe a week or two ago. The 100% extension is 64.70. The high was 62.50 here, where we're finding some resistance right now. So might just be coincidence, but really nice alignment there on that extension. And then, of course, as we bounce out of this area down here, we now have this new leg all the way up to the new highs. Notice where the retracement levels bring us. A 61.8% retracement of this, just like back here, where you got the push up and pull back to the 61. Over here, this push up and pull back would bring us right to the prediction points, right to this previous strong resistance level in the market, right where we've got resistance multiple times, support multiple times. And then the 38 essentially brings us right back to where all this consolidation happened yesterday. So we've got some really nice confluence in those terms as well. Just keep note of those levels if you're marking this stuff on your chart. And so 60-minute, again, agreeing with the 4-hour. Let's go ahead and jump down to the intermediate time frames and see if we're getting agreement. And we'll go ahead and start talking about what we would expect the market to do. Again, we had that fib retracement from the low of the day before yesterday to the high of the of yesterday, and notice we held the 38% retracement of that leg when we were looking at the market yesterday. Previous daily low, that green line to the high we made, held 38, pushed up, and then there's the 100% extension again, 61.50, and I believe the high of the night was 62.50 there. And notice this is exactly where we're finding a little bit of trouble for the bulls, kind of like yesterday here. It looks very similar, very tight range, petering out just a little bit. But again, remember, every time we start to get bearish indications, we get some type of shallow movement or sideways movement, and then the bulls jump right back in. The question's going to be, are the bulls going to continue to stay in power here and go ahead and chug right through that overnight high, which is our all-time high now at 62.50, and go ahead and push to new all-time highs. So this 30-minute, again, has the agreement from the previous daily low on the bullish signals. It has the agreement from the bearish signal off the overnight high. And then we have a nice continuation pattern here that happened right around 3 to 4 a.m. Pacific just a few hours ago. And then our 10-minute, real quick, basically agreeing. We didn't get the cleanest bearish divergence off the overnight high, but we have got some, but more bullish arguments from the lows, and then back from previous daily low also have the bullish case. So as you can see, a pretty strong bullish alignment from the 10-minute all the way up to the high time frames. And then we have some bearish clues off of the overnight high on most of the time frames. Considering what's been happening in the market for this morning, we do expect a continued push. I know you were pretty much just said bullish for the last month, and you would have been right almost every single day. But again, we're just going by what we're seeing right now. We have the potential, if they can't break through 62.50, to have some type of pullback. But if they get through 62.50, that's what we're looking for, is a break of that, and then a continued push higher. Notice where our 27 extension of this specific leg brings us right in front of the KP up here, and in the way there's some contention that's going to probably happen here right around 68 for any more of a bullish push. So we'll see what happens there. So I went ahead and I drew a fib like we do almost every morning from the previous daily low up to the high that we made in the overnight, or the high from the day before if the overnight high didn't break that. And so this morning we've got this retracement scheme for all this basically this really nice leg that we got yesterday. And notice again where these retracement levels are lining up with some other things in the market. Now we are in brand new territory, so there's really not much to the left side of the chart here to compare with, but we do have our prediction points sitting in alignment with our retracement scheme. which is something I've been saying for a very long time. I've been watching prediction points for whatever it is now, maybe 2 years. And I noticed every time we got some type of significant leg in the market, I'd throw my fibs on, and the prediction points ended up lining up almost exactly with the fib retracement. So today we've got that situation. Of course, we also have 50% of the previous day at 35 there. That's a pretty important level to hold for the bulls. And then 46, 56, 75 happens to be 50% of the previous 4-hour candle that we watch in this room. It typically acts as a really strong support and resistance level and a strong line in the sand there for the bulls or the bears. So typically when you hold above 50% of the previous day, you hold above 50% of the previous 4-hour, that is a very strong bullish clue for the coming hours after. So assuming we hold right now, the most aggressive thing that could happen is the bulls just push right out of this now, and they just hold. There's some bullish divergences here on the 10-minute off these lows. So the most aggressive thing that could happen this morning is we essentially hold here at 56.75 and go ahead and push up and to test the prediction point above us, creating those new all-time highs, which we expect to happen this morning. If that does not occur and they do not hold above 56, or maybe just the lows that we made in the overnight session here around 50, again, we have strong levels below us that we would like to look and see if we get a strong signal to go ahead and try them long, expecting again a continued push to the upside. The reason we expect a continued push, not only because that's just what has happened now again for over a month, it's also because off the highs, we only have that 4-hour, hourly, and 30-minute argument. We have a lot more of a bullish argument from the high time frames all the way down to the 10-minute compared to the bearish argument from the overnight high. And so because of that, we would expect at least a test, if not a break and a push to new all-time highs here. So that should kind of wrap it up for us this morning for our pre-market. Again, things looking really strong, looking for longs off any type of pullbacks. We've got a good retracement scheme lining up with prediction points for support. And then again, remember, anything can happen. Even though we have this type of bias, if the market starts to significantly change, we're going to have to go ahead and change our hats and reassess the situation and adapt to what the market is doing. You cannot lock yourself into just one perspective in the market, because every new tick and every new contract, every contract getting sold could, it's new data and could mean we have some type of new situation in the market. So that's where we'll leave it today. I hope everyone out there has got something to kind of hang their hats on this morning. Again, expecting the push to at least the CP, if not higher. But if there is a pullback, we've got some good levels to try some longs off of. If you're in our trade room, we will be looking for specific signals off these levels to try them. So you could just blindly try every level, but what I like to do in my trading system is wait for confirmation of a divergence on our short time frame. So we jump over here down to our 1 minute, down to our tick chart, down to our 3 minute, and we're looking for bullish divergence signals off of these levels to give us a little bit more confidence to go ahead and jump into the market. And we did essentially get a 1 minute, 3 minute, even a 10-minute, and a 512 bullish signal from this pullback right into VWAP in the 250% of the previous 4-hour, which is also sitting right at the previous daily high. So we had this huge kind of confluence of a number of different things here. And so that was the last kind of trade I would have called. Had we have been here, I would have said to try this as we got our divergences off the 200, the VWAP, and 50% of the previous 4-hour. And so right now the idea is to be long from that level, looking for this push up into the CP. Again, if it pulls back, we'll jump out of the trade, not take any risk, and wait for that pullback to one of these deeper levels. So have a great rest of your day, everybody. We're going to jump over to the members area, get some other proprietary levels up on the chart, and start looking for some trades going into the open. If you have any questions, first of all, send me questions or put them in the chat room. And again, I have a recording of every single pre-market session on my YouTube channel, so you can find that there. Now, if you're interested in joining us in the members area for the essentially our JT Futures trading room, where we do the pre-market analysis every morning, and then we start looking at important levels to find trades off of, and then we trade for the first hour and a half together. Again, looking at this screen exclusively. Every once in a while, we'll take a look at a higher time frame, but essentially looking for trades and calling really good levels in the trade room. And then we do a study session every Thursday. So today is a little bit of an anomaly. I will be leaving town before we do it, but pretty much every Thursday we join at 9 a.m. Pacific after our trading session, and we review the entire week. We go through some of the best trade setups that occurred, and we just kind of try to refine our trading playbook. And essentially, they're kind of like an ongoing coaching mentorship type of situation. So if you're interested in joining us, send me a message. We'll get you set up. And so with that being said, I hope you guys have a great trading morning here and a great weekend. And we'll be back here next Thursday for another edition of our pre-market analysis for the S&P 500 futures market. So have a great one, guys. We'll see you later. Take care. Oh my god. Did I just go through all of that and I was muted? Are you kidding me? Okay, well, I was... Was I... You hear me? How did you hear me? My mic was literally muted. Huh. The only other thing I could think of is I have my webcam plugged in and it has a mic on it. And maybe you're hearing it through there. Let me look real quick. The market's open now, and this is a quick technical difficulty at a very inopportune time, but I have to look and see what happened there. Oh, I'm glad you could hear me, and I guess you could hear me when we were in the other room, but that was strange. Let me go look at this real quick. User settings, voice and video, camera. Default, input device default. Strange.